I want to teach you a little bit about credit now. Let's talk trade lines. Trade line is any line of credit, a mortgage, a vehicle, a credit card, a personal loan, or any credit, even those U.S. consumer can self-report, such as utilities, insurance, your cell phone bill, and any other utility or regular monthly payment. These are all trade lines. Let's talk disputes. Before any mortgage application is submitted, all disputes must be removed or resolved. Wholesale lenders will not accept disputed trade lines on credit reports. Let's talk inquiries. In a mortgage transaction, so you can obtain more than one competitive offer without adversely affecting your credit score, once a lender has ordered a tri-merge credit report, for 45 days, you can have as many lenders as you want run your credit, and the credit bureaus will only record one single credit inquiry in that 45 days. Let's talk any other credit transaction during your mortgage credit transaction. Prior to and during your mortgage credit transaction, it is extremely important not to start or have any ongoing procedures that might alter your credit scores. Any changes in credit score or credit after loan submission could negatively affect your ability to close your loan. You can get your free credit report at annualcreditreport.com, but it will not show your credit scores. Experian and Equifax will allow you to see your credit scores, but only after you signed up for one of their free accounts. You need to read the fine print and look at the video in the description below for what is in the fine print before you sign up. A couple of last items. Nobody knows the Bureau's algorithms. The Bureaus each have their own proprietary algorithm, but it is the general school of thought that you should have between 3 and 5 trade lines, using no more than 10% of each one of those trade lines, and to have a small balance around $20 roll over every month and pay it off every month. This develops what they call credit experience. Mortgage companies look back generally over 24 months for 30, 60, 90, and 120-day lates. There can be no evictions, there can be no foreclosures, and there can be no open collections. There are limited exceptions, but this means that your rate and therefore your payment and therefore your DTI will be higher, therefore lessening the loan amount available to you. Upon submission of your loan to wholesalers, any trade line that is within 10 months of being paid off may be excluded from your debt to income ratio calculation, therefore increasing the loan amount available to you. And if there are problems on your credit report, the retail lender has tools like Wayfinder and What If simulators in order to see the reactions when derogatory credit is either removed or paid off. Thank you for watching. I really appreciate it. If you got anything out of this, or if you think somebody else might, please like, subscribe, and share. And if you have any questions, just give me a call. My number is 720-289-9712. I'm almost always available to help. And if you'd like to send me an email, it's michaelwyatt@grovescapital.com. Thank you very much, and we'll see you next time.